The world is spinning faster than ever before. Blink, and you might miss the next big thing. We are standing at the edge of a monumental shift where groundbreaking technology and a global energy revolution are carving out entirely new industries right before our eyes. Some companies aren't riding the wave, they are creating the tsunami, hypergrowth, game-changing, the kind that can reshape our future. Today we dive deep into two of them. A pioneer at the bleeding edge of quantum computing, and a renewable powerhouse building the backbone of a sustainable future. Hit like, share it, drop your thoughts below, and subscribe so you never miss the next big investing update. Why these two from thousands of companies out there? One is a pure-play tech leader at the bleeding edge, and the other one is an essential services utility, reinventing for a changing market. Both roads can lead to explosive growth. Quick reminder, this video is for educational purposes only. Do your own research. The Pure Disruption Company is high risk, high reward, thrilling, and volatile. The Evolution Company leverages stable demand and cash flows, unlocking hypergrowth with smart innovation. In this video, we'll compare strategies, risk profiles, and potential rewards. There's no single formula for hypergrowth. Let's pull back the curtain on our first contender. IonQ. Ticker symbol, IonQ. IonQ isn't just building faster computers, it's building a new kind of computer. At the forefront of the quantum revolution, quantum machines use qubits in quantum mechanics to process information in a fundamentally different way. Bits are 0 or 1, a qubit can be 0, 1, or both at once. That unlocks massive computational power for specific problems. IonQ turns sci-fi into reality, designing, building, and operating quantum computers. We're in the infancy stage, but progress is accelerating, more powerful, more stable, closer to real-world impact each year. IonQ is a rare pure-play quantum stock, giving direct exposure to this megatrend. The mission: build the world's best quantum computers to solve the world's toughest problems. Some tasks could take classical supercomputers thousands of years. A capable quantum system could cut that to hours or days. IonQ isn't just selling hardware, it's selling access to breakthroughs. If quantum becomes core to industry, leaders could be among the world's most valuable. IonQ aims to be one of them as we approach 2026. So what's the excitement about? Scale. Governments, major corporations, and savvy investors are leaning in. Drug discovery is slow and costly. Quantum could simulate molecules with precision, slashing timelines. Finance, materials, batteries, aerospace, even AI. Applications span the economy. Demand is forming across aerospace, automotive, pharma, research institutions, and agencies. What sets IonQ apart? Its approach. IonQ builds with trapped ion tech, individual atoms as qubits in a vacuum, controlled by electromagnetic fields, known for stability and long coherence, enabling fewer errors, a critical advantage. IonQ emphasizes qubit quality over sheer count to solve useful problems sooner. This video is brought to you by Value Stocks Investing Master Course. Want to grow wealth with solid, undervalued stocks but not sure where to start? I built this course to help you find great companies, make smart decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today. IonQ's cloud model makes quantum accessible, available through major cloud platforms. From universities and startups to enterprises, anyone can start experimenting with a few clicks. That widens the customer base and builds recurring revenue. The total addressable market is vast. If the market takes off, IonQ could soar. Investors aren't just betting on a better machine, they're betting on the rise of the whole quantum market. Now the dose of reality. This isn't for the faint of heart. The biggest risk is technology risk. Quantum is still experimental. A rival breakthrough in superconducting circuits or photonics could leapfrog trapped ion. The race is relentless. Commercial timelines are uncertain. Adoption could take many years. IonQ will burn cash to fund R&D and must show progress to keep confidence in funding. Competition from tech giants and well-funded startups pressures talent and pricing. In summation, IonQ is building a first-mover advantage in trapped ion quantum computing, pairing accelerating top-line growth with a fortified balance sheet and bold M&A. In Q2 2025, revenue reached $20.7 million, beating guidance, while the company ended the quarter with $656.8 million in cash equivalents and investments, about $1.6 billion pro forma after a July equity raise, giving it multi-year runway to scale hardware, hire talent, and commercialize use cases despite a current net loss of $177.5 million. IonQ also announced a proposed $1.075 billion acquisition of Oxford Ionics to deepen its technology stack and speed progress toward fault-tolerant systems, complementing collaborations with hyperscalers and pharma AI partners. For investors, that combination, strong liquidity, rising revenue, and platform consolidation, creates asymmetric upside if quantum moves from pilot projects to production over the next cycle. Management has guided to continued growth into Q3, and while near-term losses are part of the build-out, the strategy positions IonQ to be a category leader as the market forms. As a pre-profit name, valuation leans on expectations, highly sensitive to news and milestones. You need a strong stomach and a long-term horizon. This is a high-stakes bet. Understand and accept these risks before considering IonQ. Now shift gears. Iren Limited, ticker IREN. If IonQ is a rocket, Iren is a powerful locomotive on proven tracks. Iren is an Italy-based multi-utility. It provides electricity, natural gas, integrated water services, and waste management, the nuts and bolts that keep cities running. Known for stability, but now blending that with green growth opportunities, a mature market player aggressively investing in the future. Regulated and quasi-regulated operations provide steady, predictable cash flow. That cash funds expansion, a major advantage over pre-revenue startups. Iren isn't just maintaining the old world, it's building the new one. A stable core plus clear green strategy puts Iren on our 2026 watch list. Iren's catalyst is the global energy transition, especially across Europe. Massive policy-backed push to decarbonize, shift to renewables, and boost efficiency. Iren is expanding solar, wind, and hydro, adding clean megawatts and new revenue streams. It's a leader in circular economy, creating value from waste. Digitalization lowers costs, improves service, and boosts margins. Growth is grounded in projects with incentives, offtakes, and clear regulatory frameworks. Risks, regulation. Tariffs and policy shifts affect profitability. Project execution. Delays and overruns can hit returns and reputation. Debt, capital-intensive build-outs. Watch leverage and interest coverage, especially in rising rate cycles. Market risk, volatile power, and gas prices. Hedges help, but risk remains. Strong governance and disciplined capital allocation are critical. Despite risks, the secular tailwinds are powerful for a well-run utility like Iren. In summary, Iren Limited, formerly Iris Energy, has evolved from a Bitcoin miner into a vertically integrated, renewable-powered data center operator positioned to serve both BTC and the AI compute boom. In its FY25 update, Iren reported Q4 revenue of $187.3 million and net income of $176.9 million, and outlined a path to roughly $1.25 billion in annualized revenue under current assumptions, more than $1 billion from mining economics plus $250 million from an AI cloud business targeting 10.9K NVIDIA GPUs by December 2025. The company also highlighted capacity to deploy over 60,000 NVIDIA Blackwell GPUs across existing British Columbia campuses, critical optionality if AI demand keeps compounding, while operating under a clean energy footprint that can appeal to enterprise customers. With sector tailwinds, minor market caps and financing activity hitting records this fall, and a brand shift to Iren reflecting a broader HPC identity, investors are buying a scaled infrastructure play that can flex between BTC and AI cycles, backed by tangible profitability and expansion visibility. We've traveled two roads to hypergrowth. IonQ, a high-risk disruptor chasing a new era of computing. Iren, a stable utility fueling growth through the green transition and circular economy. Match picks to your goals, risk tolerance, and time horizon. Watch IonQ's qubit quality charm quantity, contracts, cloud ramps, and Iren's project pipeline, returns, tariffs, and debt. Want exclusive stock tips, in-depth analysis, real-time trade alerts, and free guides? Join the StocksGalore Patreon, link in the description. Question: which path fits you in 2026, quantum disruption or green utility evolution, and why? Tell us in the comments. Don't forget to like, share your thoughts, and subscribe so you don't miss the next important investing update. Thanks for watching, and I'll see you in the next one.